Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Today, we're going to be talking No Donation Friday. Although I don't know that this qualifies as a true No Donation Friday, we're going to go over through the psychology of really getting into the weekend on the right foot and getting ready to go on Monday with good, fresh momentum. That's what we always want to do. We want to make sure that we have momentum in the markets. We always, trading is one step forward, two steps back. Well, we want to make one step forward, maybe half a step back, and then three more steps forward. In order to do that, we have to have good positive momentum. That's what Fridays are all about to me, preserving momentum. If you guys are a football fan or a sports fan, I like playing defense. I play defense on Fridays. Now, today there was a couple trades in there we really couldn't pass up on, and I'm going to get to those in a second. But I want to really start off with the gold market. I mean, it's what everybody's talking about. I was just listening to some guys on the radio, and they're doing backflips over what gold and silver are doing right now. I'm looking at this market as being an incredibly explosive one to the top side. So I got the question earlier, Shane, if you love gold and you're bullish gold, why are you selling it? And the answer is I'm not selling it. I'm not selling it. What we're doing is we're waiting for our levels. We're going to step up and scalp in front of a big level. And this isn't even really a scalp. This is just I have a pretty good feeling, a pretty good feel for these big round numbers. Understand when a market trends. When a market trends, you always got to be aware that you've got big round numbers in play. Those are likely to be your areas of two-way action. Remember, the premise of scalping or short-term trading is you're just looking for buyers and sellers to duke it out. All right, we're not looking for a top to come on the market. We're not looking for Warren Buffett to come in and dump a bunch of gold or China to dump their gold reserves in the ocean. We're not looking for that. 2750 has nothing to do with that. What that has to do with, we just need a debate. That's it. A little bit of uncertainty up at the top of this market in a debate. And this is the trade idea that we put out earlier today. Counter trend short from just beneath 2750. Probably the only one in the world right now saying short gold. We're not short in gold yet, but we're getting close. And I wanted to get this trade idea out there because it's incredibly important that we understand this thing could be in play Monday morning, and we don't want to miss it. We don't want to miss this one. So good to see everybody back in the room. Mark Corp, good to see you. Bobby Bob, hi Shane. At least I made it. No donation Friday, but WTI was to take me away, but Pendulum saved me. Yeah, with the Pendulum, but we talked about this yesterday in the live chat late in the day, Bobby. Pendulum strategies are for flat markets. And we said, listen, if you want to trade WTI flat during that overnight session, you can do it with something like the Pendulum. But you got to be ready for that 9 a.m. Eastern kickoff. And as soon as we saw the U.S. traders get to the desk and that big run of liquidity right at about 9 a.m. Eastern, we got a big bearish break. And I'm going to go ahead and show you. I'm going to break down WTI for you in depth today. But let's get started with gold. All right, gold right here. Trade idea is very simple. We're looking to sell right up in front of this 2750, somewhere right around 2747. I believe that was the level I got. No, I want to be aggressive here, 2745. So that's going to go ahead, and that's going to be realistically the trade that I'm looking for next week to develop. Now remember, guys, we're not trying to call a top. We're not interested in calling the top of this market. I could care less, or I couldn't care any less if gold tops out at 2750. I'm not trying out for a job on CNBC. I'm a trader. And what I want up there is some money. That's what I want. I want money. And in order to get that, I'm going to have to be a little bit aggressive because I know there's sellers in front of 2750. The real question is, where do they come into the market? And for me, I think it's going to be right around 27.45. If you want to be more conservative, 27.47.50. That's another pretty good one. You'll notice I'm real big on quarter handles. Absolutely love quarter handles. So something to think about there if you're interested in trading gold. Now, one last thing I want to point out, and I wrote about this in the trade idea, but if you didn't get it, that's okay. This is a 4-hour chart, 4-hour gold chart. No question about it. In this area, we want to be long. Until we get up to this zone where there's some sellers going to come into this market, we want to be long. Now, the problem with people, a lot of traders that rely on momentum oscillators, like a stochastics or like an RSI, is they get into, you can see right here on this RSI on the bottom, this is just a default RSI 14 setting. You can see we are well above 70 right there. Our reading is right around 79, something like that. We have been in overbought territory going back to yesterday afternoon. Now, the problem is a lot of traders, once they get into overbought territory, they just sell the market. They say, well, eventually we'll come back down into the normal territory, and that's where I'll take my money from. When you're dealing with a momentum oscillator, like a relative strength index, like stochastics, if you get caught up going against a really strong trend, you're going to get faked out of the market. You're going to be told to sell when you probably should be buying. That's why I really think that if you combine an RSI with our key levels, we did a video on key levels a while back. Check it out. It's on the How to Trade YouTube. If you want to go that route with an RSI, you probably need something else, especially if you're going against a trending market. Now, if we're flatlining, if we're in a rotational market condition, sort of like this, right around September's high when we were testing that zone, you see we were right around that overbought level. I could have said, yeah, you could probably sell into that maybe once we get a little RSI there. But right now, to depend on a momentum oscillator to short this market is a horrible mistake. It's a bad one because we're trending. The only time I'm taking a shot at this to the short is when we get our number. That's it. That's where our confidence comes in. That's where we say, okay, we're going to make a little bit of money up here. Not because we're right, but because our trade location is better than the rest of the shorts. And that's pretty much where I'm going to leave it with gold. Watching this one, though. Right now, I think we're going to go off the board this week, probably 27.20, somewhere in there. I expect a flurry of action before the close today. So if I was trading it right now intraday, you got to be long. Somehow, some way, you got to be long. Right here's your 30-minute signature. Something like this is actually very, very instructive. Right there's your low, your 9 a.m. Eastern low. There was no news out today. There's absolutely nothing going on in the news cycle. But something like this, right from that spike low to this spike high, that tells you everything you need to know, guys. Everything you need to know. Spike low, spike high, pullback, failure at 38%, and we're rocking north. This is about as bullish as a market gets, especially when we're talking about a market with the depth and the breadth of a spot gold. So if you're a short-term trader, Shane, I got to pay the rent. I got to trade gold right now. What do I do? Buy it. Buy it and just hope you get follow through. Or otherwise, if you're a patient trader and you want to wait around and maybe make a little bit of money next week, then we're looking to sell right up there around 27.5. We've been calling 27.50 for a long time. We're going to get there. I don't really see any way around it. We might get a little bit of a tussle here at 27.25. I'm not too worried about that, though. 750 is where the fight's going to be, so I'm watching that relatively closely as we roll into the deep U.S. session. A couple other things to get up to date on. I do want to sort of recap these before we move on to fresh markets. Talked a lot about these anchor points. Just a quick anchor point review, guys. We were all over this Great Britain pound anchor point. Monthly level right around 130. Pretty darn good. If you remember, we went long at market the other day. Your low right there was spike low. Spike low was right down in the neighborhood of 123. Spike high is up there at 134. That's a nice big 6-month range or so. That's a healthy range. Pullback, 130. Loved it. 38% trending market. 38% retracement. Big round number at 130. It was absolutely fantastic. Go down to your 30-minute chart, and you can see, that is it. Right there, took some heat, came back down, sort of fiddled around, and then right here, the bidders were pretty much done debating the bottom side of our level, and we just rallied. So that was a pretty darn good trade. If you hung in there, maybe you took a loss. You could have easily got stopped out beneath this level. We were worried about this one falling away. Did it happen, though? Not really. What was your swing low down there? Somewhere right around 129.73, and you're up here right around 130. We were talking about price 71s as being your out there. That's a pretty good trade, but it wasn't easy. Good level, though. Really like that one. This one was fairly easy. Aussie CAD. Go back earlier this week. We talked about getting insulation from the U.S. dollar, trying to stay away from the U.S. dollar. Dre Day, happy Friday. I had a great week. I hope you did as well. You see right here, this Aussie CAD, we wanted insulation from the U.S. dollar. And again, these are demo dollars, guys, $2,200 or $2,700. You probably could have got that trade. You probably could have got a trade like that on your demo, not necessarily your demo, but your prop account. You'd have had the liquidity to do that. Well, this was a pretty good one right here. Spike low, spike high, 2-month range. We pulled right back to 91.79. I really liked this trade. I thought it was a pretty good one and one that played out almost perfectly. There's your high, failure there, great rally there, came back down, rallied again. That level's been very, very good to us. So if you're trading the Aussie CAD somewhere right around 91.80, well, if you rotate back down there, it may be worth another shot. That's for sure. It may be worth another shot. So a couple other things that we want to go over here today, and the biggest one's psychology. I want everybody to understand what a No Donation Friday is. A No Donation Friday is, number one, a Friday. We get that. It's the last trading session of the week. And what you need to look at, I really thought about the concept of No Donation Friday, and I said, what is it to me? And I say, okay, what's Friday? It's the last chance to do what? Either make money or lose money. Now, if I'm consistently rolling into Fridays and I'm down money or I'm at scratch, then over time, the only thing that's going to matter to my profitability is how I trade Fridays. I'm not interested in that. From an experience standpoint and from being in the markets and being a short-term trader, a scalper for a decade, what I'm looking to do is be ahead on a Friday. If I'm not ahead on a Friday, then something is not going right. Either I'm not seeing the market well, the markets are going crazy, or my strategy, my execution hasn't been where it needs to be according to my strategy. That's it. That's it, and that's all. Typically, when I roll into Friday and I've gotten beaten handily, it means that I did something really stupid. I let one draw against me. I took a big draw. Typically, if I'm executing a lot of trades during the week, very rarely am I behind on a Friday. But that's just me. Now, everybody's different. Now, if you're just beginning and you're up 500 this week and you busted your tail and you worked really hard, the last thing I want to do is to see you give the money back. So here's how over the years, I came into Fridays. I took big losses. I've had a few big gains. Our last NFP was a big, nice, healthy trading day for me. But I've taken a lot of big losses, especially when I was a young trader on a Friday. This is it. This is what I came up with, how to manage it. I got tired of going home being angry all weekend. Tomorrow's football Saturday here in the United States. I want to be ready. I want to get out the brats and have a few beers and relax and really have fun with after a week's worth of work. I don't want to sit around stressing about my account and worrying about Monday's open. This is how I got around that. If you're having a winning week, you put half of that money in your pocket. If you made $500 this week, you put $250, non-negotiable. You take half of that money home. Why? Because that ensures that you get paid at least something for your week's worth of work. That's first and foremost. Number two, if you had a losing week, if it was small, trade it as usual. All right. If you're down just a little bit, it means you're winning some, but you're losing some, and you're all right. And then if it's big, consider waiting until Monday to trade. If you're having a horrible week, something's not going well, get out. Get out, come back Monday with fresh recharged batteries. Neutral, usual trade as usual. You can either reduce your leverage or don't trade at all. I'm going to leave it up to you. If you're right at scratch and you're sort of haven't got out of the starting blocks for this week, that's okay. There's nothing wrong with that. Just make sure that you leave this week on your terms. You can either trade it as usual if you feel good. You can either reduce your leverage, maybe try to get some consistency going towards the end of the week, or don't trade at all. That's completely up to you. That is completely up to you. All right, we did have some stuff in WTI crude oil that was huge. This came out yesterday. Now, I promised to cover it today because I do want to talk a little bit of crude oil. A couple of things. If you were in the live chat, you saw Connor Woods put out his trade idea, and it was shorting WTI crude. And I talked about stepping in and scalping from that 68.50 area. Remember, a position trade going for the amount of money that Connor's going for in his trade has nothing to do with my trade that looks like it's going against his. It's not. Now, a lot of people are going to say, well, he's selling and you're buying. You guys are conflicted. Not at all. He's got a position where he's looking to make a lot of money on a big bearish move, and I think that's great. I don't have any problem with that. And I can point out why the bearish side of this market is probably the right one to be on. On the other hand, there's nothing wrong with being able to step up and grab 15 or 20 ticks if I like a good technical long opportunity. Remember, I mean, I was going back and forth with him. We were kidding each other earlier today, and he goes, "What, are you going against me on crude oil?" And I go, "No, I'm not going against you. I'm planning on being in the market, maybe a minute and a half. I just want to bounce from my levels. That's all I care about. I'm not going to hold this thing for 3 or 4 days and watch you absolutely, kill it for $4 or $5 of huge profit." So that's the difference. Always remember, big difference between scalping, position trading, day trading, swing trading, long-term investiture. It is all different. It is all different. So like I said, I think Connor's on the right side of this market. I really do. But as far as scalping goes, our 68.50 level was absolutely magnificent. A couple of things for crude oil that I want to cover. Yesterday, remember, we had the Columbus Day holiday Monday. Yesterday was the day that they released the EIA crude oil inventories report. And here we go right here, a negative 2.191 million barrels. That was well beneath our expected build and way beneath last week. So what does that mean? That's an unexpected draw. That's an unexpected draw. This time of year, we're already pricing December crude oil. We are into the fall months. I have an inch of snow outside on the ground that has not melted yet, and it's about 11:15 my time a.m. It's wintertime. We're going into winter. We need to be building up our oil supplies. If we're still drawing down those supplies, it's a bullish market driver. But listen to this, and this is the last thing I'm going to say about the market drivers. We're going to read the report because it's important. The election right now is driving everything. It's driving everything in WTI crude oil, and I'm going to go over it in just a second. going to go over it in just a second. So right there, you can see the numbers. It's a draw. I would forget about the rest of it. If you want to get into depth, send me a private message, and I'll go over some of what these things mean. Crude oil imports are down. Inventories are down. That means that we're not producing exactly what we need to be producing here in the United States. But that, is nothing new. Right here, this is the WTI or the EIA weekly status petroleum report. You see right here, I don't care about the rest of it. I don't care about anything. Go right to the third paragraph of this release. That's what I want to know. U.S. commercial crude oil inventories, excluding those in the SPR, we'll talk about that another time, decreased by 2.2 million from the previous. At 420.5, the U.S. crude oil inventories are about 5% below the 5-year average. That's it. 5% below the 5-year average. Things are getting worse. Things are getting worse on the supply front. It's potentially a major, it's setting up to be a major bullish year next year for WTI crude. Now, a lot of that's going to depend on your election. Okay, this is a chart that I put out earlier today. This is a 1-minute chart. Now, this is a great illustration of what exactly happens when we start looking at previous days' highs and lows. We made a key levels video out, I don't know, about a month ago, 6 weeks ago. Nobody watched it. It's got like 500 views. It's a great video. It talks about key levels. Key levels are a huge part of what I do in the markets. And we're going to trade some key levels live next week. If you take a look at the live stream schedule, a lot of live trading. Connor's going to do some live scalping. I'm going to do some U.S. Open live scalping. We're going to trade some 9 EMAs. We're going to trade some key levels. We're going to actually show you guys trading. And a lot of that's important. Right now, I'm going to show you what a great trade was. And I think after a decade, you sort of get onto these things. But that low right there, okay, came across the board yesterday. And that was right around the post right after your EIA numbers dropped. Now, that was yesterday's low. Yesterday's low right there, 69.54. Now, remember, we just went through rollover. This is December WTI crude oil futures. Now, we're going to look at U.S. oil in a minute. The price action's the same. They're right now, the U.S. oil CFD is tracking December WTI. Right there. That's yesterday's low, 69.54, somewhere in there. No, right there, 69.50. All right. Look at what you got right here. Absolutely huge. It was right there, 60, excuse me, I'm misreading, 68.89. Look at that. Clean sweep. As soon as we took out yesterday's low, we got a huge break. Look at the volume. The volume spikes up to 4,200 contracts in a minute. That's huge. Link to key levels. Yeah, Forex Trader 27.3 Pozo. Just check out the How to Trade channel. You're on it right now watching the live stream. Just go ahead and check. Just go to the video section of that channel and just cursor back. It's about 6 videos back. Go ahead and check it out. But the key levels one's a good one. I liked it. In any case, right there, bang, we wiped that out. We got a huge spike of volatility, nice big bearish move, and then right down in here, this was the sort of the trade that we put out yesterday in the live, or excuse me, that I put out a few hours ago in the live chat. We had a big macro level right there at 68.50. We stepped up and we bought. Low right there, 68.53. We were looking at about, I like a 5-tick shade on these big time levels. And then we got the big bounce right up there. It paid us off about 25 ticks right away. That was a banger. That's what I call a banger. Now, let's break down this oil market and really look at what's happening right now. Here's why that anchor point was so important to me. If I can find my levels, or if I can find the charts. Sometimes these things are pretty clunky, especially when you're on a 1-minute chart. In any case, something like this is absolutely huge. Take a look at what's happened here, okay? Fascinating levels. Yeah, we've got a problem. TradingView's got a problem with their charts. Let's go to U.S. oil. I'll show you. Rollover day. Contract expired. You can see that see right there, we're having contract expiration. We've got problems with our pricing data. I would be very careful with this. Pricing data has changed. In any case, we're gonna have to scratch that. I was gonna go through crude oil with you. This is not what's happening in WTI. This is not at all what's happening right now. We're printing 69.30, but you can see that the numbers are off. Okay, there's a 1-minute. There's our 1-minute chart, a tremendous rally. Let me go ahead. Let me try this real quick. Just bear with me. There's one thing that I always like to do. Anytime you have a problem with your data on your platform, anytime you have a problem with that, you've got to really say, okay, what's happening? And if you're trading futures, it's relatively simple. You go right to the CME Group's website. somewhere in here. You'll learn a lot by just going to these websites. So right here, let's just go take a look at this. You can go right here, go to markets, featured products, WTI crude oil. That'll pull that up. Something like this, December. That's what we're looking at. You click on the little chart button. Okay, that pop-up's not happening. You guys don't get to see that, but the chart's popping up. We're having data issues. All right, right there. As soon as you start seeing data issues, you scratch it. So if I'm looking at WTI crude and all of a sudden we have expiration happening, we have a big discrepancy in where exactly things are being priced, I would be very, very careful trading this right now. I'm going to go ahead and get back to you on having the levels, having the key levels. But if you see this right here, this big time move in WTI, more than likely that's a function of those spreads coming in. The spreads coming in between the November contract and the December contract. Be very careful if you're in the market right now in WTI. Anytime the data starts messing up and you're having problems with data, go find something else to do. Go trade gold, do something like that. That's for sure. All right, let's get on to the next one. This was an interesting trade right here. This was a 9 EMA trade. I'm on the Euro USD, and I pulled this one because I want to show you what a losing trade looks like and how your trade management can really help you. This is a Euro USD 30-minute chart. Now, we're looking for that 9 EMA strategy with RSI confirmation. So right there, we're into overbought territory. All right, right there on your Euro USD 30-minute. You can see right there, what are we looking for when we're overbought on our RSI? We're looking to sell the market. In order to sell using the 9 EMA, you're going to need to sell when you get a bar close. Well, we got that bar close. All right, we got that bar close. We sold right there. All right, our close right there was 108.53, something like that. Well, what exactly happened? We lost. Price action took us right out. Our stop loss would have been above that spike high, which is up at 108.64. You can see right there, bang, bang, and we got stopped out. What are the red lines? My stop loss would have been above this swing high. My profit target would have been down here in this market structure. It looks like about a 1-to-1. Maybe you could have put it lower if you wanted. But take a look at what's happened here. Price blew up in our face and stopped us out. Now, a lot of folks out there, hey, listen, I caught a lot of static and a lot of great compliments for the 9 EMA video, but a lot of static as well. And the biggest complaint was you're gonna lose long term doing that. And this is a good example of a loser. Remember, we lean into losers on this live stream. We do not run from them because you learn from losing. Every time you lose $1 on the market, think of it as you're paying for information. You better learn something. Learn something from your losses. Right here. We lost. What did I learn? Well, clearly, price action. We're fighting a trend. Boom, bang. We got stopped out. What's the silver lining? Entry right around 108.53. What was my stop out? 108.64. I lost 11 pips. You're not going to lose the ranch losing 11 pips unless you're trading huge leverage. We'll talk about that at some point too. But take a look at this trade. Let's say you were trading this all day, starting right at that beginning of that 9 a.m. Eastern, 30 minutes before the cash open. Big time sell-off there. What do you got? All of a sudden, you're down here. You're in oversold territory. You're looking to buy. Where do you buy at? Well, we don't get a close there. We don't get a close there. That's close. That's close right there. Not quite. There's your close. So if you're long from right there, bang, let's say your stop out's down there, you got a tremendous move. You got a tremendous move from there to there. You're in the money. So your buy would have been somewhere right there, right around 108.30, and you're up printing about 108.63. That's pretty good stuff. It's a pretty good trade. So I would definitely remember that if you're going to trade moving averages or EMAs, whether you trade them 1-to-1, 1-to-2, or 1-to-3, or 1-to-5, as long as you stick to your discipline, risk versus reward, you're going to be just fine. You're going to be just fine. And that really is the key to trading any of these things. You're going to have to know what it is to be in the market at the right time, to stay in it, and then to get out. And that all depends on what you want. A lot of people put these on and they leave these moving average trades go. They just let them go. That's fine. You can do whatever you want. For me, I probably would have already taken it. It looks like a clean, at least a 1-to-2. So something like that could be very good. Or we could just get chopped to death in here trying to, okay, I'm stopping myself out here, and then I'm going long here, and then I'm stopping myself out. Take care with these 9 EMA trades. They can be pretty good to you. All right, let's go ahead and see if we can execute one live. Let's go right here to the NASDAQ. This is a NASDAQ 30-minute chart. Excuse me. Let me get futures going. Excuse me. Boy, it is dry and dusty here in Dillon, about 28 degrees Fahrenheit during the overnight. All right, 30-minute chart. What would we be looking to do? You can certainly reverse engineer this trading day. During the overnight, we were looking to sell. Clearly, you got to move there. But for right this minute, not much going on. We're not in overbought or oversold territory on the 30. We could certainly take this down to a 5 if we wanted, a 5-minute chart. Do we have any trades? Not really. Right there, you would have been looking to sell. You could have got a little bit of money there, but the rest of the time you're in policy, as I like to say, so not much going there. As far as would I be looking to trade a strategy like this right now on a Friday? Not a chance. We're going to go ahead and come back and scalp this thing Monday morning and see if we can't get something going when the markets are a little bit live. Right now, people are getting ready to head for the door, and they're not too interested in taking any more risk. As far as the crude oil chart, though, I do apologize. This just is not this chart. The numbers aren't right. Something's definitely wrong, and I do believe it's rollover. I think TradingView's made a mistake. Not necessarily with what's happening right now. That is the price. But, yeah, we've got a little bit of chaotic price action here. And let's go ahead and pull our monthly chart up. We can pull our weekly chart up, too. Well, a weekly chart essentially is where the 68.50 line came from. Spike high right there, or spike low, spike high. And you can see right there, we wanted 68.44, somewhere right in there, 68.50. That's where our chart, that's really where our level came from. I was looking for something different on the monthly, but it looks like there's an error. In any case, right there, there's your bid, 68.44, 68.50-ish, 55s. Those were pretty good. Those were pretty good areas. So a lot going on here. If you wanted to trade crude oil right now, I don't necessarily have a problem with being short. Just be very careful the rest of the trading day. Right there's going to be what's your U.S. Open, your traditional pit open right there at 9 a.m. Eastern. Hugely important, everyone. If you're going to trade crude oil, absolutely hugely important, period. Why? Volume. Look at the volumes. Something like that. Alfredo Shane, in which temporality can, I don't know that word, Alfredo. That one blew over my head. Temporality. In which temporality can that 9 EMA strategy be used? Time frame? Periodicity? You can use it on anything you want. I'm a big fan of, we've done this all week long and done pretty well at it. 1 minute chart on something like the E-mini NASDAQ. Here's how I would qualify my 9 EMA trades. I would make darn sure that I was during a period of time where the market was active. So if I'm going to scalp a 1 minute chart using a 9 EMA with RSI, it can be done. It can be done. You just need to make sure you're in a market that moves. This is essentially the crux of it, Alfredo. Down there, you're in oversold territory, right around 10:10. Where are you looking? You're going to get that buy right there, the first bullish candle after your overbought signal from your RSI. The problem is right here, you're seriously in overbought, so you're looking to sell. You would have sold right there, got a little bit of money, and then stopped out. The difference between this trade and this trade has to be your risk management. You can't lose more up here than you made down here. That's the only thing that makes a moving average system go. Risk versus reward. So right here, as you can see, we're starting to get a little bit of a move. This is a 1 minute chart. Now, if you wanted to back up and say, okay, let's go ahead and trade something like the Great Britain Pound USD, and let's go ahead and do it on a 4-hour chart. I would recommend a 4-hour chart for your. Let's close that out. That's demo dollars. Let's go ahead and sort of adjust your time frame up for a Forex pair, because Forex gets such huge volume around the clock, that I would go to a 4-hour chart, and I probably would look to swing trade using this type of strategy and take a position maybe for a day or two. And I think you can do it on a 4-hour chart. I really don't see the problem with that. You can see right there, just going back there, that's to Tuesday. So you're only talking about 6 bars a day per 24-hour period. You could easily do that. Now, the challenge that you're going to have is getting this RSI sort of out of kilter. And right now, you can see that we're trading right in the center of that RSI, so you're not going to have a trade for this Great Britain Pound USD for a while. So maybe the longer time frames sort of suggest that you could just get away with trading a regular strategy where you just get a close above it and you're long and a close below it and you're short. Personally, I probably would look to that RSI to filter things out a little bit, unless you wanted to go to a crossover. Then you could certainly do that, and we're going to do that next week as well. So that's what I would be looking at as far as just executing, finding a trade. New Zealand pound, the Australian dollar. They're all just sort of flatlining. Here's our loser from earlier this week. Dollar Swissy. Don't really have anything. But something like the E-mini S&P 500, you never use a 4-hour chart there, though. You're going to want to focus on the U.S. session, 30 minutes. Why? Take a look at the volumes, guys. Volumes are very important, especially when you're trading futures. In here, low volume, I call it junk. You throw that away and you trade when everyone else is trading to try to capitalize on their inefficiencies. That's how you do it. So right there, do we have a trade there? No. You see right there, you had a trade yesterday on this E-mini. Bang, bang, there's your sell. If you had your stop loss up there, you got a major move. That's the idea, is to catch moves with this 9 EMA stuff. Hope that helps, Alfredo. All right, let me see. I got a couple other things to look at here. Yusuf. Shane, do you think the Fed is to keep floating the market in risk mode before the election and dump afterwards? I think that you're make a very great point. I saw a historical chart yesterday that showed, the history of rate hikes, specifically as they sort of gravitate towards an electoral cycle. And over the last 20 years or so, we've seen interest rates, really be very low historically. So to answer your question, Irfan, if in fact the Fed looks to hike after the election, it's really going to put the clamps on our rally here, on our equities rally. I think they're going to keep cutting, but I'm not sure that that's going to be possible because our inflation's up. If the jobs numbers and the economic numbers hold firm, then I think that you probably are at least going to get interest rates to hold static. Our mortgage rates went through the roof last 2 weeks. That suggests that the long-term folks believe that interest rates are going to stay where they're at or go up. And the markets right now are pricing that they're going to go down. I think that there's going to be some major, major pain in risk assets after the election, no matter who wins. Speaking of that, let's talk a little bit about the election, and then we'll go ahead and sign off. We got to look at silver, too, before I leave. Right here, Polymarket, this is the biggest political website, wagering website that there is. And right here, you can see there's over $2 billion involved in this market. This is a big market. And right there, you can see that Trump's opening up a really significant lead here, 60-40. This is as high as the lead's ever been over Harris. I think that you're going to see this. This is really starting to pan out like Trump has almost an insurmountable lead. And here's the reason why. You're looking at no toss-up states. Sanzo, good to see you, Sanzo. No toss-up states, 312 for Trump Vance, 226 for Harris Walz. But take a look at this table right here for those of you that are sort of political aficionados. 2016 results. It's not showing you the 2016 polls beforehand. 2020 results. Take a look at 4 years ago, all these battleground polling states. Take a look at how the distribution. Biden plus 4, 6, 7, 3, 5, 1.6. Let's see, 2.5, 11.4. And Trump was up a half, and Biden was up 6 there in Minnesota. Take a look at what they are now with Trump-Harris. Trump's ahead. 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 Harris is up in Virginia, and Harris is up in Minnesota, 2 states that the Republicans don't win ever since Reagan. So this right here is the reason why most people are really starting to lean Trump, and the markets are pricing Trump. Now, what does that mean for, say, crude oil? Like I said, it's a bearish market driver for something like crude oil, but what could it mean for something like silver? Take a look at our silver market. This thing's absolutely exploded today. This is a 30-minute chart. Silver's through the roof. Through the roof. I heard a gentleman talking earlier today that's really a pretty smart guy. And he was talking about 3250 being the last real bastion of resistance. You can see right here at 3250. That was the sort of the short-term compression I'm talking about at 2750 that we're likely to see out of gold. That's all we need to make a lot of money. Just a little hiccup in the trend. That's all we need. But right now, silver's broken high, and sort of back to our political point, what does silver do as the Fed begins to cut rates or keeps cutting rates? Does silver go higher? That was in April of 2011, the height of the financial crisis after 2008 to 2012. That's huge. How high does silver go? The high there's 49. We're starting to get up into these areas where the gains for silver can be explosive. you'll notice right here on the monthly, and I know I'm looking at a long-term chart, but a lot of you hold silver bars. They're a pretty good investment right there. Doji, compression, nice big rally, doji, bullish. People are piling into metals right now because of uncertainty, geopolitical. They also believe that the Fed is going to take a relaxed interest rate approach to this. I'm sort of in the not-so-fast camp, but I think no matter what happens, metals are going to go up big by the end of the year, and it looks to me like that's really starting to happen. Does silver go to 50 by New Year's Day? I don't know. I can tell you this. I would much rather be long than short. And if you take, look at silver, maybe even on a 5-minute chart, something like this. We're trending, guys. Why do you think we would be moving so hot in the metals towards the end of the week? Let's go think. Think like a trader now. Why are the metals markets moving right now? Right now. We got about, 2.5 hours till the market closes? Something like that? Yeah, about 2 o'clock my time, 4 p.m. Eastern. People are getting insulated from what can happen this weekend. Why? Elections coming up. Anything can happen. Geopolitical uncertainty, Israel-Hamas, escalation. Everybody's waiting for Israel to strike back at Iran. They pledged they would. Probably going to come over a weekend. Usually that's when these things happen. This is safe haven trading, guys. Swiss francs gaining a little ground against the dollar. That's all it's about. Geopolitics, geopolitical uncertainty. All right, everybody. Let's see. We got a couple of things. Let me see. Sorry for the word temporality. No worries, Alfredo. I see the period. Yeah, periodicity. Same thing. Temporality, periodicity. I wasn't up on that word. I couldn't follow it. Thank you. The translator of my laptop. Yeah. Hey, listen. I speak one language and I barely speak that one. So yeah, Bryn. I should have stayed in silver. Bryn, this one is, hey, listen. It was not too long ago. Really. Where silver was down here around 20, right at the beginning of the year. Down there around 20, you've made 33% and there's been no pain. And that's if you just lined up and bought a bunch of silver coins. So that's something that could have been done. Let me see, Markcorp. Trump has gone pro-Bitcoin. Has he not? So would that be bullish for Bitcoin? A lot of people are calling for $1 million Bitcoin. I don't know. We're a ways off $1 million. What I will say is Trump is started purchasing Bitcoin. He wants to launch he's launched a crypto himself. They're pro-crypto. Trump camp's going to be pro-crypto. They're going to be deregulation for everything, including cryptocurrency. Gary Gensler, the guy that's running the SEC right now, more than likely is going to be history when Trump comes in. So as soon as Gensler's gone, you're going to see a lot of the downward pressure, the regulatory pressures on crypto probably get taken off the board. It's no secret that Trump's a pro-business person. He's going to favor business, everything from drilling oil to cryptocurrencies. The biggest thing that I think honestly could drive something like Bitcoin or something like Dogecoin or Ethereum or Shiba or whatever you're into is that report from Amazon that they're going to build their own nuclear reactors. They're going to have small nuclear reactors to power these AI operations. That's an amazing market driver because right now the only thing that we believe that's keeping a lid on AI are the physical components. Conductors, copper. We'll look at copper here in a second. Something like copper, going to need a lot of it. Where are you going to get it? Well, we're expecting shortages by 2030 in electricity. Electricity, the United States, we already think they're going to make up the shortfall with natural gas. Not if they start building small nuclear reactors that can, what if a data center all of a sudden is nuclear? That opens up the door for all sorts of AI advancements. And I think everybody's pretty much in lockstep that AI is going to be the next level for cryptocurrencies. So do I buy Bitcoin at 68? You guys are pretty good chartists. A lot of you in this room know charts. Nah, it's not really a triangle, but I don't know, rotated rectangle, something like that. What does that look like? It's a flag. It's a monthly bull flag. This market more than likely is going to explode to the top side. I don't see any technical reason at all why you would get out. We put a YouTube video out 2 years ago, back when Bitcoin was down in this area, this pullback right there, and we called the bottom of it. It's there. Go check out the Forex Signals YouTube channel. It's there. But, this is as bullish as it gets. It's a P. It's a bullish flag. Bitcoin, the bullish flag. Definitely interesting. You'll notice natural gas. Natural gas right now is off about 1%, but it's still holding in pretty good position going into the winter. I fully expect natural gas to rally up towards 4. I don't really see any way around that. As far as what could a copper be? All-time highs earlier this year, May, right up around 517. Look where we're at, 441. It's all about AI when it comes to these things. Copper, huge. Crypto, another big AI thing. I think that the top is definitely going to be there for these things. Would I rather hold copper or silver? Right now, silver. Silver's the big dog. It's making up a lot of ground. I think we're going to get a shot to sell that gold, though, at $27.50, and I think it's coming earlier next week. All right, everybody, I want to thank you for joining me today. I've rambled on long enough. We ran way long. We've been running way long all week, but that's okay. If somebody's out there watching and has questions, I'm more than happy to stick around and answer. You'll notice the stream schedule next week. We're going to be doing something a little bit different. We're going to be varying up, or at least I'm going to be varying up by the time that I stream. So instead of the mid-session brief, we're going to do a couple U.S. Opens. I think we're doing 3 U.S. Opens and 2 mid-session briefs. We're also going to do 1-minute trading on the 9 EMA with RSI on Monday morning. That's going to be great. We're going to pull it up. We're going to track our P&L. We're going to look at those indices, maybe some commodities as well. And I'm going to see if we can't get on the right side of the ledger, make a few winning trades on that stream. And then we're going to actually go over the 9 EMA with RSI strategy. I'm going to lay it out for you. We're going to talk about how we're going to trade it. Then we're going to see if we can make a little bit of money doing it. We got live scalping with the Piranha. Connor's going to have that. I'm going to do some tick scalping on the Tuesday mid-session. We're going to actually pull up some futures contracts, see if we can't do a little bit of tick scalping there, make a few dollars. And then we've got live trading on Tesla, Amazon, and gold. You're not going to want to miss that one. Connor's got that for you. And then we're going to do some live Bollinger W stuff on Thursday, and then we're going to go ahead and close the week with a Fibonacci counterpunch series. Next week, not a whole lot on the news cycle. That's why we want to trade. We want to get in there and trade and maybe do a little bit of live stuff and do our best. All right, wonderful. Look forward to that. All right, guys, fantastic week. Thank you for joining me. Bobby Bob, shout out. Alfredo, thanks. Go Pats. He's going for his Patriots. My Montana Grizzlies have tomorrow off. We finally get a bye week, so I'm going to have a bit of a rest on the football front. Huge college games tomorrow, though. Alabama, Tennessee, Georgia, Texas, North Dakota State, South Dakota State. Watching a lot of them, so it's going to be fun. I'm going to kick back, take a day off. All right, everybody, thanks again for joining me. Tune back in next week. If you have any questions at all, come on into the trading room. Hit me up on a private chat, and we'll do the best we can to help you out. All right, everybody, have a fantastic weekend, and we will see you Monday.